Hello, everyone, and welcome to the Hardcore Finance Show with Shimon and Alex. This is our first filming in the studio, so we're pretty excited about our new studio, about our new sign, the new lights, these beautiful cactuses or plants that you have here. So, hey, man.
Hey, long time no speak together.
Long time no speaking. Good to do this together.
Yeah.
So I have it's been a while. We've had a lot of good guests, but since then we've had this insanity with Congress and the Senate, and a lot of people asking about, what's going to happen with crypto, what's going to happen with Bitcoin. We haven't done one of these in a while, and actually, I wanted to talk about. Let's do a why Bitcoin thesis post all of the China mining exodus, post the Senate bill, and specifically, you know what happened today?
What?
So. We talked to a lot of our friends about investing, and actually one of my friends texted me today, who I've been trying to get, her, Kristen. I've been trying to get her into crypto, and she said, you know what, I'm going to do it today. Which episode should I listen to? So why don't we record one for her?
Sure, let's do it.
Let's do it. Kristen, this is for you, okay? Which podcast should you listen to? You should listen to this one.
But just to be fair, this will be a good opportunity for us to review what has changed about Bitcoin since, I think I was looking at our episodes, we did a similar episode in end of 2019. So what has changed since then? And then I would also love to talk about how much should someone allocate to Bitcoin versus other cryptos. Many things have changed. No, versus other crypto.
Oh.
So I think many things have changed because of these bills. So it will be interesting to chat about that.
Yeah, so great. So why don't we start? So, the way I like to start explaining to people what Bitcoin is and why crypto in general is that I think there are many theses that one needs to understand. I think thesis number one is really the money is technology. There's a fundamentally good book to read, Layered Money, Nick Bata. He's a USC professor, one of the great minds in the space. So it reads very fast. You can listen to it over 6 hours on a nice hike. But it talks about how money is a technology. So the point humanity has always had a problem with being able to store wealth. You talk about this a lot. You're a farmer, and your ability to literally store your grains overnight versus a scavenger coming to eat it is a leap in productivity, because you don't have to, let's say you're sick the next day, you don't have to go out, you can live off of your grains. So same thing with money. Money became a mode for people to store their wealth. Maybe let's touch upon the tech part. Like, how is money, technology, coins, and so on? We don't have to go too deep, but I think it's important to explain this point that it is a tech.
Yeah, so the idea is that money basically is a form of a ledger, and people had ledgers before that on like clay tablets in Babylon and stuff. Basically, when somebody owes you something or you owe something to somebody, you need to write it down somewhere. But then that only works if everybody agrees on the same ledger. So what happens when you have to trade among different parties that may not necessarily agree on the same ledger? There's this thing called money, which is basically the most saleable good. So it's the good that you have the highest likelihood of being able to getting rid of it in the market in order to buy something else. And different things have functioned as money, but humanity converged on gold. And why did humanity converge on gold? It's because of gold's properties. There's two really important things. One, it's its scarcity, and two, that it's kind of evenly distributed around the globe, which means that there wasn't like one person that owned all the gold. And so after gold, basically governments came after several stages, but long story short, they said, look, this gold thing is stupid. It costs a lot of money to mine, and why, if we can just like have the ledger centrally controlled? And basically since World War II, since Bretton Woods, the U.S. has kind of the ledger of who owns what to whom through U.S. dollars. Some people talk about treasury bills or other things that are equivalent, but think of the dollar as just the basic unit of store of value, and the Federal Reserve is the place that holds all the ledger in one place. Now, that worked all well and good, but the problem is, if you guys listen to the two previous episodes that I did solo, because we live in a democracy, people can vote to just print money. And it's really hard to resist the temptation to print money because, people have to be reelected. And so if somebody runs against you on, I'm going to print all this money and give it to people in social programs and so forth, or do wars or whatever, it's really, really hard to resist that temptation. So what has happened is that the amount of dollars have just ballooned And then what makes it even worse is that since the global financial crisis, it's not just the dollar, all the currencies have been inflating. And that's a very, very big problem because, like, it could be nice where you get into debt, you get a mortgage, and then your debt gets inflated away. That's the nice part. But the bad part of this is that you can see there's this website, What the Fuck Happened in 1971, WTF Happened in 1971.com, where it shows that since we went off the gold standard, a bunch of societal stuff stopped working as well. For example, productivity and compensation were going up like this in a straight line, and then in 1971, productivity keeps going up, compensation is flat. Another example, in 1960, I just saw it today, it's really interesting. In 1960, if you made the bottom 20% in terms of your salary, one yearly salary was enough to buy the median house. Today, I believe it's the top 20% or the top 10% or something. So basically, less and less people can afford stuff because the money has been inflating.
Yeah, so there are many good points. You talked about the technology part. You talked about the inflation part. Let's come back to inflation in 1 second. Just want to land the point as a prelude to what we're talking about. People talk about crypto, right? Crypto is fundamentally a technological breakthrough. There is a lot of tech behind it. And when people say, well, what's the fundamental value and so on, there are networks upon which many apps will be built. But beyond that, even beyond that, money is a technology. And the breakthrough, just like the breakthrough was from various ledgers to gold, to silver and gold, and to monies, to actual coins, which were maybe diluted or not based on the value of the coin. All of this is a technology. So it's just the next natural step. Now, about inflation. So you're right. When the central banks are printing money, we're now jumping from, we established the fact that money is a tech. Okay, let's put that aside. Let's park it. Going into inflation.
I just want to say that issue is very, very tight because I just mentioned the inflation because it's a trade-off. So people said going off the gold standard is a great thing because we'll just save all the cost of mining gold and we'll be able to do the same thing. And what I'm claiming is that it wasn't like version 1 was gold, version 2 was fiat currency. No, version 2 had some advantages to gold, but also had disadvantages to gold. And my claim is that Bitcoin is literally gold 2.0. So it's literally a better version than gold that's better than fiat money. So it's kind of like you take the best parts of gold and the best parts of fiat money, you combine them, you get Bitcoin.
Sure, but the point is, it's a technology. It's like saying, the next iteration of a car was, the I don't know, the Ford or the Zhiguli from Russia, where I came from. It was the next iteration of a car. It was shit. Yeah. So, but the point is, there are iterations of money, fiat, commercial paper, Bitcoin in this case. The point is, Bitcoin is, like you said, an iteration of money. Now, there's a lot of, I'm zooming on the macro landscape, there's a lot of printing, okay? And so money printing equals inflation, more or less, especially with the amount of money we printed now. And so why is that important? It's important when we talk about demand for a certain object. When you have inflation, more people have more money to spend, okay? And they spend it on goods, on investment properties and real estate and so on. There are two things that happen, which is very important. One, in periods of inflation, the bottom classes get screwed much more than the top classes. Why? Because the bottom classes don't save enough, so they literally need money to buy the food on the table. The top classes can save a little bit. Now, while those savings get inflated away, what they do is they put it into assets that protect and hedge them against inflation. Stocks is one of them. Real estate is another one. But mainly people throughout history, especially if you look back, stocks and real estate are fairly modern, right? Even if you go back, hundreds of years, people put it into gold, treasure gold and precious metals. Yes, of course, real estate as well. Why gold and real estate? They were scarce. They were the most scarce assets out there. So when you have a fixed supply or nearly fixed supply, and people flock to fixed supply assets, when you have an increasing demand, the value of that asset goes up. Now, let's talk about why Bitcoin is better than gold. So when in periods of inflation, and I want to turn to you so you can explain this whole gold versus real estate versus Bitcoin in this case. But in periods of high inflation, people, again, tend to flock to harder assets. We look at the U.S. Our, a huge inflation for the U.S. is 5%, 7%. 7% is unthinkable. Big inflation abroad is 100%, 1,000%. Many countries go through hyperinflation all the time. Argentina, Venezuela. This is today, right? Turkey, Lebanon. Yeah, many countries. So while we sit in the U.S. and some pundits out there on Wall Street have the audacity to say that Bitcoin and crypto are meme stocks and it's a joke, to the people abroad who are experiencing today massive inflation on top and would love to have the dollar, which is in itself inflating, to them Bitcoin or hard assets are not a joke. They are literally life and death. They are literally an ability to restore your wealth. So,
and the very important part, because you just glossed over it saying they would love to have the dollar, it's important to understand that when there is inflation and when those things happen, the government just prevents you from getting dollars.
Yes.
And it's just like so important to understand. Even so, I lived in Israel for many years. In Gaza, right, because it's under siege, literally, the Israeli government reached an agreement with Hamas to have suitcases of dollars that would land from Qatar, I think, or from some Gulf state. They would land in the Ben Gurion airport in Israel. They would put them on a car. They would drive them to Gaza to deliver them into Gaza, and then they would use these bills to pay the salaries of the public sector employees. Now that's a siege, but when you think of like a government that's hyperinflating, they just stop all the flows to dollars, and then you have a black market rate, which is like crazy, and it's really hard to get your physical dollars. It's really hard, and in the bank for sure you cannot withdraw the dollars. Lebanon, for example, now they just said, sorry, you got dollars in the bank, you can't withdraw them. We automatically convert them to lira. You can withdraw the lira. So getting dollars is really hard when there's inflation.
Yeah, and if you get those dollars, the dollars are also inflating right now. Again, not at the same rates, but they're inflating. So the point is, the rest of the world, the vast majority of the world faces inflation, faces capital controls, and faces, especially exacerbated after the financial crisis, a complete lack of an ability to store wealth. And so what happens is they flock to something that's scarce. Gold before, real estate before, but Bitcoin is an asset that's scarce, that people agree that is an asset, and that can be remembered in your head. You remember your password, you can walk away from it, and a militia coming to a single, let's say, mother in Africa has no idea whether the mother has Bitcoin or not. But they know if she has gold, and they can kill her and her kids if she has gold, because gold is visible.
And not only that, even if she buries the gold in her backyard, for example, so nobody can find it, she cannot leave the country with it. And so it's just basically how I want our viewers to think about it. It's really good, the framing of like, gold has some good properties, some bad properties, which is hard to transfer across space, but it transfers value across time decently well. Fiat money, it's very easy to transfer it across space, but it's controllable. People can just stop. People can take your bank account. People can stop your ability to wire money out of the country. People can stop your ability to get wires from abroad and all of that. So fiat, good across space, but it's really hard to basically, you don't own it. It's not like a bearer asset. And so when we think about it, basically Bitcoin is better than gold and better than the dollar. And of course it's better than the hyperinflating currencies. So that's like one way to think about it. The other way to think about it is, forget about the dollar. Even if Bitcoin just takes the market cap of gold, which is currently around $11 trillion, that puts it as around $550,000 per Bitcoin. So like the upside from here, even without talking about money, just take gold's market cap, it's better than gold anyway. There's no one person hasn't been able to give me one argument of why gold is better than
not just you.
Zero.
To the world.
Yeah.
There are many Michael Saylor debates about this.
And you see, actually, the proof is that gold, yes, it increased from like $35 to like $2,000, but it stayed kind of flat at $2,000 while the money was inflating like crazy due to COVID. And Bitcoin, specifically because of COVID, I think went up from like $7,000 to like 60,000. So basically, I think that Bitcoin is just taking more and more of the market share of gold.
And we know this from various articles and institutions that we talk to. And so, look, even if nobody in the US wants to adopt Bitcoin because we have it very, very well, the rest of the world will, because it is literally, and this is not a hyperbole, their only escape from oppression or their only path to store wealth. And I mean, those are very powerful words, and that's a very bold statement, but it is very true. And if you take a second to suspend your preconceived notions about, you know, the financial system and even the World Bank and the whole, if you just say stop, like we're starting over, people would design Bitcoin. People would design a system that is Bitcoin, that's global, that's completely traceable, that has no single or double or entry faults because it's immutable and it's decentralized and it's completely transparent and fair to every single player who wants to be in this game, so to speak. It is literally the one of the most well thought through innovations of our time. And until now, kind of the perfect innovation. Now, look, never say never. There are many things that actually could go wrong. I'm not one to say Bitcoin is the gospel and God. There are risks. But there are also risks with money. There are risks with fiat, clearly, from it being inflated. There are risks with gold. You can forget where the hell you put it. You get it confiscated because somebody's coming with a gun to your head. There are risks with diamonds and fine art. I mean, there are risks to every asset. Nothing is secure. There are risks to U.S. Treasury bills. Do you remember I think 5 years ago when the U.S. didn't raise the debt ceiling and didn't pay their obligations for a short amount of time, albeit, but the credit rating went down? Mm-hmm. There are risks to everything. Nothing is quote unquote risk free. And so when you understand that and you understand that, hey, the rest of the world is coming to this asset because it's literally their path to salvation, its path to protecting wealth, well, then you start thinking, holy shit, like, there is something here, right? There is definitely something here. This episode was brought to you by Caviar Gems, the world's most exquisite dehydrated caviar, used for cocktails, seasonings, and your favorite recipes. And also our partnership with Defiance Media, a 24/7 syndicated linear TV network that brings you all the latest in AI, robotics, blockchain, crypto, and anything innovation. Tune in.
Awesome. And so I wanted to touch on another very important point that you've made. You say, if you're in the US, it's not a problem because you can invest in real estate, you can invest in the stock market, and the currency doesn't inflate so much. I have an issue with those three things. First of all, the currency doesn't inflate. We are very lucky that we live in a society that really benefits from technological deflation. So what happens is that the amount of money that's being printed is actually around 12% per year. The issue is we don't feel the 12% in the consumer prices because the technological deflation makes up for some of the inflation. So what you see is the consumer prices is the net increase. So it's like all the money that has been printed minus all the technological deflation. You can think of technological deflation as flat screens are getting cheaper and cheaper every year, right? But
that's why I get a new flat screen every year.
Exactly. But the problem is there are things that do not have a lot of technological deflation, such as land, right? Such as healthcare, education. Like those things, I mean, the cost of education is not like you have commodities coming in and like a material coming out. And so like if the price of commodities drops is good, and if the process of making the material is more efficient, the price drops. No, education is basically you have very few people that are really good professors. Everybody wants to learn with those very few good professors. Or with healthcare, right? It takes many, many years to train a doctor. No matter how unless you find a way to teach doctors in half the amount of years, the ratio of how many hours the doctor has as a productive doctor versus the amount of hours that it takes to train them kind of fixed, right? So it's really, really hard. There are things, and there's regulation there's a bunch of other things. And so people have been complaining, for example, housing prices have been going up by a lot. Now, the CPI doesn't include housing prices. It includes the rent equivalent. And the problem with including the rent equivalent is like, yeah, if everybody's renting, then it's great. But then who's owning the houses? You see, Blackrock is buying like all of the single family houses.
That's just so crazy, by the way.
But I don't blame them, right?
I don't blame them either. Free markets, but it just the whole scenario is a little wacko, if you ask me. I mean, that a hedge fund is buying up single family houses and preventing consumers from getting into those houses. Now again, it's a free market, but it's just kind of fucked up.
Yeah, it's really and also like a house is basically like a bond. So it's like for BlackRock, they pay up front and then they get rent, and then they also get the appreciation of the asset. Just like with a bond, you get like the interest, the coupon, but also the bond can appreciate if the interest rates drop. So they're just treating it as a bond, but that's a problem. I think it's a problem if people cannot own real estate, and what's even more of a problem is that people will lose access to this hedge. Right? Before, you could say, okay, at least, all these stories about like, oh, this house in San Francisco that's $1.4 million, somebody bought it for $40,000 in the 60s. That's it. Those days are over.
I don't think so.
Well, because like if hedge funds buy all these things, everybody will be a renter. That's my
I mean, they're not going to buy it.
So that's my issue with real estate. And then another issue I have is with the stock market, right? So many people say, look, the stock market is great. You just put your money there, and it is an inflation hedge. Problem is, you can change capital gains taxes, and we'll see. I really expect those taxes to go up as the government needs more and more funding sources. And B, when you buy the stock index, you're basically not getting pure exposure to the money printing, because you also have to pay for salaries of people, for the buildings, for the cars, for like everything. So Bitcoin is basically giving you the exposure to the money printing, but without all these like inefficiencies of having to invest in specific companies or like in employees. So it's basically the purest way you can store value. And to your point, there are risks, but like it's very important to understand that other asset classes have risks. And I think that asset classes that have worked as traditional stores of value, as time progresses, there'll be less and less good stores of value.
Yeah, look, people are just more used to other types of assets, so they don't consider the risks. Even though if you come up and you say, hey, can you name 3 things that can go wrong with the stock that you own? I bet you pretty much 99% of people would name 3 things. Same thing with your house or art and so on. So let's talk a little bit about what has changed. We've established that money is a tech. We then establish the fact that there's demand, even if it's not in the U.S., which there is, because smart people are realizing this. But outside of the U.S., people are going to demand, being in Bitcoin because it's a store of their wealth. So what's changed since we talked about this in 2019? Why is it higher?
So it's very interesting. I listened to some of the episodes that we did in 2019, and we actually predicted a lot of the things. It's actually crazy. Did you know that we had an episode from January 2020 where we said we were expecting a crash in the stock market?
No,
that's like before we knew.
That's good.
It literally, it says it in the description of the episode, like, yes, we think a crash is coming. How would Bitcoin, react?
That's fine.
It's crazy. Okay, so what has changed? I mean, many things have changed, but like the main 2 things I would say that have changed is one, as governments have been printing more and more money, the values of other assets have been becoming really, really historically high. So if you look at the ratio in the stock market, there's this Warren Buffett ratio of the GDP divided by the stock index or something. I don't remember exactly the KPI, but it's basically some kind of KPI of the economy divided by the stock index. It's like historic highs, right?
It's GDP divided by...
Yes. Now, some people say this means the stock market is going to crash. I actually don't think it's going to crash long term. It just means one thing, that the rate of increase in real terms that you will be getting from the stock market will be just a little bit lower because the prices are already high. Real estate already really high, right? So that's one thing that has changed, that since we last spoke, everything is much more expensive, right? And so it becomes less attractive as an investment, while Bitcoin has a lot more upside. And then the other thing that has changed is Bitcoin has been attacked very, very severely, and it always survives. It's happened in the past many, many times, but we had 2 very significant attacks. One was China banning mining. We saw that hash rate drop. The hash
by
rate
50%.
By 50%. It's never happened in the history of Bitcoin. The price did drop, but it recovered really
Well, what's the hash rate? Explain just really quick what the hash rate.
So the hash rate is basically the security mechanism of Bitcoin. I think it's a little bit too technical to get into it, but think of it as like how many people are mining Bitcoin. The more people are mining Bitcoin, the harder it is to take it down. And then when miners turn off their mining machines, for example, to move them from China to another place, less people are mining Bitcoin, so it's easier to attack, right? So many people speculated that China would do a like 1-2 punch thing. It would like ban mining, but then it would like confiscate all the miners and like attack Bitcoin with a 51% attack. That didn't happen. Another really cool thing is the U.S. government tried to put very draconian legislation about Bitcoin, and we showed really, really good political resistance. But also another thing that I'm very optimistic about was that even the harshest amendment that they wanted to put in favored Bitcoin over other cryptocurrencies. And I think that's a very strong sign because it means that the government knows that they cannot stop Bitcoin, and they kind of admitted that. So the White House supported the amendment that basically said, look, if you're doing proof of work, you're kind of like less scrutinized.
Although I disagree with you. I don't think there's
Finally, that's great.
Yeah, good.
It only took us, 20 minutes to disagree?
More. I'm looking on time minute. I don't think the White House and these guys know. Somebody just came and said, oh, not proof of work. Like, okay, fine, just let's get this thing passed. Not proof of work. That's the sad part. So it just set the stage, basically. A legislation came through there's two fascinating things here. They put together an infrastructure bill, Biden's big package, and in the 11th hour, they wrote in basically a couple paragraphs about crypto in order to close the gap and have the whole bill paid for. Okay, the gap was a $1 trillion bill. The gap was $30 billion, and they just said, "Oh yeah, we can get $30 billion more in taxes from crypto." As a freaking aside, instead of funding the IRS to go after people who don't pay taxes, and I don't think they're very right-wing personalities in crypto, but I think mainstream crypto, everyone says, look, we live in a country, nobody wants to avoid taxes or be illegal. Pay your taxes, just abide by regular regulations. But anyway, so in order to stop people, go after people who are not paying their taxes in crypto or mostly outside of crypto, actually, many hedge fund managers and so on are not paying their taxes. Donald Trump owns the Trump Foundation CFO wasn't paying taxes. That's how they got him. So allegedly.
The trial. He
was
indicted.
Allegedly. Okay. He allegedly, had put his kids to school for 10 years for free, allegedly. So anyway, they wanted to close the tax gap. So they wrote in rules that basically said that any broker in the industry has to report KYC and essentially have PII to do 1099. So report the earnings and the payments that you send out to someone sends to you, so you can keep a cost basis, so then the IRS can go after people. The problem is that broker definition didn't, hit exchanges, which it should hit exchanges. It hit exchanges and Bitcoin miners and software developers of Bitcoin and other crypto, right? And in Bitcoin's case, node operators. Those three groups, software developers, Bitcoin miners, and node operators, literally or physically cannot get to this information because of the way the system works. It is impossible. They just see a ledger that says address blah 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 sends to Bitcoin to address blah blah blah. Those addresses are anonymized, and all they do is especially node operators, just record the same ledger over and over to make sure that the system works, right? So it's a bunch of staffers, probably kids who know nothing about the space, wrote this thing in. You got pushed in the 11th hour, and nothing's going to happen, by the way, to crypto. That's the crazy part. Nothing will happen to crypto. Fintech will just leave the U.S. because people will be de facto illegal. So it's throwing out the baby with the bathwater, if you will, shooting ourselves in the foot, whatever stupid metaphor we want to use for this. It makes me so angry because it's just so ridiculous. It does nothing to crypto. It forces a black market to happen, potentially, right? So people will actually go underground and not pay more people won't pay taxes, people will leave the country. And so there'll be less people paying taxes anyway. It's just so idiotic across the board. But the crypto industry, we all riled up. 80,000 calls in 2 days, 2 or 3 days. and it was an unnecessary way to awake a sleeping giant, I think.
Yeah. I mean, for me, I took this as a very optimistic thing. I'm not worried at all about the government stopping it. I just think that there was clarity and there was basically, it's you can look at it as an attack or you can look at it as a good thing. But in any case, that's more information that came into the system. Basically, I want people to think when they think, and again, it's not investment advice, but when you think basically of the fair value of Bitcoin, like even if we say, some people say all of the store of value assets, are $100 trillion in the world, and Bitcoin's going to take all of that, and that's going to put the price of Bitcoin at like, I don't know how to do the mental math, but over $1 million, right, or $10 million for Bitcoin. I say let's not even get there. Let's say it's better than gold in any way, right? So it should take all of the value of the gold. So the fair value of Bitcoin is like $500,000. Why are we only at 45? It's because there's a bunch of risks that people don't know how to assess. It's just like a startup, right? The difference between Series A and Series B is that you just de-risked a bunch of stuff. A Series B startup is still a very tricky proposition, but it's less tricky than a Series A. Then you get to the Series C, you de-risked a bunch of other stuff. By the time you IPO, you still have risks and stuff, but like it's much, much less risky than a seed stage startup. So I think that's the maturation that's happening with Bitcoin, which is like we're de-risking more and more of the perceived risks that people have. And then another thing that I think is very important is like the work that NYDIG and all of these other institutional companies are doing to really bring the big money, the Wall Street money into Bitcoin. It is happening. Like it is happening, and the way I can see it is that every time the price dips, it gets bought up relatively quickly, which means that there's big players that are just waiting for the price to dip in order to buy significant amounts.
Yeah, look, in this case, I do agree with you. I just don't disagree with you that the legal. I agree that it's de-risking. I just think that these guys wrote it in because they have no idea what they're talking about. It's not like it was thought out and intentional. But yeah, so money is a technology. There is demand. You need to hedge against inflation. So we talked about a couple of things that's happened. I didn't know that we predicted the crash, which is amazing, by the way. That's amazing.
Yeah.
Although who could have predicted that, Corona? But we talked about how now there's the Senate has come out and that's kind of washed through the system. I actually think we're gonna hit all-time highs inevitably fairly soon. And so look,
Not investment advice. Do your own research.
always do your own research. But why invest in Bitcoin and ultimately how to invest in Bitcoin? Let's touch upon those two and we can close. If we haven't hammered down the why yet, maybe here's the reason. If you want to protect your own wealth, regardless of what class you're in, if you're in upper class, you want to store wealth, right, and grow it. But especially if you're in the lower class, what you said is, you have to be the bottom 20% can afford a house. Now it's to be the top 20%. People are pouring money into this real estate and stock market because there's nowhere else to go. And so front run the people that have been screwing you this whole time and go into an asset that's better than that. You just have to study it a little bit and have some faith that the game theory of how this is all going to unroll out will roll out. There is risk. There is definitely risk. Nothing is de-risked. But now versus 2019 versus even 2020, with companies going in, with institutionals going in, with all of the big banks who said this is a fad, it's going to go away. All of them. Goldman has a trading desk.
It's amazing. I just have to say, there's so many tweets of how it started, how it's going, where the how it started is a quote from like Jamie Dimon. This is, don't touch it, I'll fire anyone who touches it. And how it's going, it's like, oh yeah, we have a trading desk.
Yeah.
And you can get it from more and more institutions. It's amazing.
Exactly. So the more and more people get in, now we have a country. In 25, 24 days from today, 23 days from today, Salvador will go fully live with Bitcoin being accepted as a payment everywhere. It's just, to say that it's reached escape velocity would be the understatement of a century, I think. The question is not when, the question is not if, but when.
Yeah, and a very important thing that you mentioned is the fact that because many countries are adopting it, there's two things. One, it's nice, you get more users, But the key part is that sovereign territories are very important because until countries adopt it, the US, Europe, China, Russia can all say this is illegal. Anyone who accepts it in exchange for like something like Turkey, for example, I think you cannot use it as payment. You can still use it as store of value because they want to collect their capital gains taxes. But like it's illegal in Turkey to buy something with a Bitcoin, right? So as long as even one country exists where this thing is legal, it's useless to ban it because then everybody who has Bitcoin can travel to this country, do all of their things there, and then travel back. So that's super important. I think people don't understand how important it is. That you can only ban something if there isn't one country. And I always thought it would be like Iran or North Korea or something. Like I thought, the government will ban my Bitcoin. I'll have to like eat bulgogi in North Korea to do my transactions there and then come back. No, it's El Salvador. It's beautiful. It has great beaches. It's close to the US. So this is amazing. I'm really bullish about El Salvador.
By the way, you said something very interesting. I was always a bull, but it really snapped in my mind. This is a perfect prisoner's dilemma. So you said Turkey hasn't banned holding as an asset because they want to collect capital gains. So unless every single nation in the world collectively and at the same time bans Bitcoin, the game theory, the correct solution to game theory, what's playing out is that everyone will accept it. Because if you don't accept it, you can't collect, and you don't accept it, it's going up. You can't collect on the massive mountain tsunami of capital gains taxes that you can collect for your economy. So you're for sure going to do it because you're like, well, if I'm the only one's banning it and everyone else isn't and their wealth is going up, they collect the taxes and I'm missing out. It's punishing yourself. It's like saying, hey, we lost the space race to the Soviets. Yuri Gagarin was the first in space. So it's like, well, ban space, we give up.
Exactly.
It's the same exact logic when people say, well, Bitcoin is going to be banned. It won't be banned. It can't be banned.
Exactly. And then another interesting thing about the whole idea of arbitrage between countries is that if a country bans it, right, it's almost like they sanction themselves from a monetary network that's very, very efficient. And that's the one thing that we did not talk about, which is like there's Bitcoin, the asset, and then there's Bitcoin, the network. You can use Bitcoin, the network, without being exposed to Bitcoin, the asset. So, for example, if I want to send $1 from like the US to El Salvador, currently it's impossible for me to do, just impossible, because the fees are more than $1. Like I'll have to pay $30 to send a wire of $1. So it's like impossible below a certain amount, right, to send. And so then what happens is that people, batch their things so that you collect, let's say you have an El Salvadorian working in the US, instead of sending remittances every day or every week, they send it once a month, which means that like they have to sit on this money. This money doesn't grow, doesn't put to productive use, right? Now, this El Salvadorian could, with, for example, Strike, you take the $1, you convert it to a stable coin. The stable coin converts to Bitcoin for just a second. The Bitcoin moves to El Salvador, then it gets converted to a stable coin there. You're exposed to the price of Bitcoin for literally 1 second, so nothing could happen in terms of volatility, but you pay no fees, you transfer $1. Think of what that can do to the productivity of the nation, to the amount of doing business, right? Like a company wants to buy something. Imagine like they're buying a digital, some digital service, not like a physical good that has to be shipped. It's the difference between waiting 3 days for everything to clear and get it, or waiting 1 hour. Multiply that by the amount of wires sent, and you get so all of that. You basically don't have to be exposed to Bitcoin. You can just use this as a network. So a country that bans it, it's almost like saying, okay, yeah, we're banning this technology that's better than our existing technology. They're going to suffer, right? So they're going to shrink compared to other countries that will grow.
And this is exactly what communist countries did. They said, forget international invasion, we're going to have our own cars and whatever. And, we see where it ended up. I do want to say there's one point, and then let's talk about how people can get in and what portfolio location should be, and then we can call it a night. When the Senate had the fight, this was the first time I remember and I've been following politics since probably, solidly since 2002, 2001 when attacks happened. It's the first time I remember in such a arduous way, in such a passionate way, You had Democrats and Republicans on one side and Democrats and Republicans on the other side, passionately speaking out against their positions and completely together. That's because Bitcoin is not a party line issue. It is literally an issue of those who understand tech and are open-minded and curious versus those that don't understand tech and just don't want to see the world from beyond, their little tunnel vision. And that's actually quite beautiful. It's quite encouraging.
Yeah, it's very beautiful. And again, for example, my political views tend to be a little bit more right wing leaning, but I know some people that are very much on the left that are very much pro Bitcoin, because I think the government, steals money through inflation and then puts it to bad use. They think, the left leaning people think, that corporations control the government. Billionaires control the government, right? So they're influencing the government in order to enrich themselves. So whether you're on the left or on the right, whether you're in the middle, hard left, hard right, Bitcoin can be good for everyone. It's like the story that you will believe in will be a bit different, but it's just a better technology. Alex, to your point, I love that you started this episode saying, like, money is a technology, Bitcoin is a better version of this technology. That's all you need to know. And the fact that when the internet launched, many people were skeptical, just like now. People are skeptical about Bitcoin. So, like, it's really an opportunity to front run the big, because once Wall Street gets it and stuff, it will be already very, very expensive, and the growth will be slower in the price. And then I had another thing that I wanted to say about the price, but I forgot.
The Shimon forgetfulness.
No, there was something about, like, the front running of. So if you hold a belief that most people don't hold, and you're right, that's a recipe to get rich. And you can apply this to anything, right? You can start a business. Why doesn't this business
electricity, literally electricity,
everything, right? So like we are telling you,
flight, electricity, every major, any innovation is exactly this. I believe we can do this, and no one else does, because otherwise, everyone will be in it.
Yeah. So this is your opportunity. Like, if I were you and I was skeptical, I would just try to disprove our point on Bitcoin being better than gold. If you cannot disprove the fact that Bitcoin is better than gold, the fair value of Bitcoin should be $550K, and
it's a 45 now. And
45K now. Yeah.
From here to there, that's noise.
Exactly. And the other thing is, like, just a fun fact. If you held gold when the U.S. Government banned it, it was $25 an ounce. Just think of how many ounces of gold you could get with, like, $25,000. You could get, like, 1,000 ounces. All you have to do is, like, have it stashed somewhere that they can't take it from you. So what if they banned it? They unbanned it like 20 years later, and then you would have been super, super wealthy. So the fact that the government, or if you are sitting on a stash of alcohol, and then suddenly the government bans alcohol, guess what's going to happen, right, to the value of your alcohol, as long as the government doesn't take it from you.
Yeah.
So it's just like the perfect.
And the government can't take Bitcoin because it's in your head.
Exactly.
So let's talk about where to buy. I mean, look, we're obviously biased. We work for an exchange, so you can come to our exchange or buy it there. Come to OKCoin. But what's the best way, and how much should people put in of their portfolio? And Bitcoin versus other cryptos. We touched heavily on Bitcoin. There are other crypto projects. Maybe that's for the second version of this discussion.
Yeah, maybe that's a second.
That's
a second discussion. And in terms of where to buy it, look, I like to say to people, Bitcoin is like a domain name. It's fully fungible. It doesn't matter if you buy your Bitcoin on your domain on GoDaddy or on Google Domains or whatever, as long as, like, you can control it. So the important thing, and look, there's a big kind of debate about, like, how to store your Bitcoin and stuff like that. My point is, find an exchange you like.
OKCoin.
OKCoin has the lowest fees, but I mean, just find an exchange you like, buy it there, and then make sure that you can control it, whatever that means for you.
Yeah. And so, do you
have anything to add on?
No, I mean, like there are many good exchanges. Obviously, we're partial. We do have the lowest fees, but just so you're able to use it and actually be able to move it out, don't buy it on Robinhood. Sorry, Robinhood. Maybe if you guys would allow people to withdraw. Is that what you meant?
Yeah, that's what I meant by control. So yeah, sorry, I should have mentioned it. So there's a big debate of, like, do you leave it on an exchange or not? I'm less interested in that. The point is, buy it at a place that will allow you to send it to Coinbase, to send it to Cash App, to send it to like the other exchanges, which means they're interoperable. Robinhood, you just get exposure to the price, but like that's not enough because you saw what happened with GameStop, right? It's like Robinhood can just say, oh, okay, you're exposed to a price, but now we're having some technical difficulties, so you can't sell it this way.
But not only that, if you want to take your Bitcoin out of Robinhood, I mean, many people ask us, let's make this land a point, right? Robinhood, the pros, very easy to buy, gamified, beautiful interface. The cons, if you want to if you want to move your Bitcoin from Robinhood into a different wallet, you have to sell it, which creates a taxable event, which maybe you're not ready to pay taxes. If you're selling, you have to sell your Bitcoin on Robinhood, rebuy it on Coinbase. That's the only way to actually move them. But let's say you bought it at 20,000. You bought one Bitcoin. It went up to 65, went down to 45. You want to move it, you sell it at 45. You have to pay taxes on $25,000 worth of gains. And even if you take that 45,000 and instantaneously rebuy at Coinbase, so your net worth position hasn't changed. You just created a taxable event for yourself, and 30% taxes. You actually have cost yourself money. Robinhood is going to cost you money if you buy crypto. It's just a fact. Until or unless they allow you to take out the assets and move them to a different wallet without having to sell it. I'll touch upon one thing, and I think we should wrap. There's a lot of information here, and we can do a second episode. But percentage of your portfolio, look, we're full believers, so we are probably more bullish without going into details than others. But I think if you want to play it safe, definitely put money you're willing. Before I used to tell people, put money you're willing to lose. Now I'm not even saying that because I don't think you're going to lose the money. I think 5 to 10% of your portfolio should be a nice starter to get in. Is so long as you can handle the volatility of the price. The price is volatile, but that's the price you pay for such incredible increases.
Yeah, and I still tell people, only put money you're willing to lose because still we don't know, a bug can come up in the software, a bunch of things can happen that will cause it to go to zero and never recover. I just think it's a very low probability. Now this is not investment advice, but my one best practice is like make sure to rebalance your portfolio. So for example, let's say you start with 10% of your portfolio in Bitcoin. Then Bitcoin goes from 45,000 to 450,000. Suddenly it will become like...
Do you rebalance your portfolio?
So I did not rebalance my portfolio now in the recent top, and I'm a little bit sad about it because...
How would you have known that that's the top?
No. So that's what I'm saying. When you rebalance your portfolio, you don't have to know if it's the top or not. So say, look, I'm starting with 10%, let's say, of my portfolio. But once Bitcoin hits 50% of my portfolio, if it goes above 50, that's when I start like selling part of my Bitcoin and getting into other assets. And the 10 and 50 are up for every person to determine. Maybe it's 100% for someone. Maybe it's like 20%. I'm not saying which values to choose, but just consider rebalancing. It can be a very interesting thing. And then another thing is consider dollar cost averaging. If you don't want to try to time the market, you can just set up a recurring buy every week, every day, every month. And then it's like you just set it and forget it. There's a downside to that, which means if like the price were to increase very sharply from now on, dollar cost averaging is not good because like you'd rather come in with a big chunk. If the price goes down, dollar cost averaging is great. So every method has advantages and disadvantages. I really don't want to give investment advice to people because seriously, every person has a different situation. Someone told me a very wealthy friend that I have. He's like, look, if your net worth is like $50 million. You're less worried about making more money. You're more worried about protecting your money, right? If your net worth is like $20,000 and you're just getting started in your career and you've got a sign-up bonus from your first job of $20,000, maybe put all of it into Bitcoin, right? Because you still have your whole career ahead of you. You get a regular salary that pays for your expenses. So really, every person has a different circumstance.
I do want to say that I always rebalance my portfolio when my Bitcoin allocation goes above 100%.
Yeah,
it's an automatic rebalancing. down to the 100. Well, look, I think we had a good discussion, a good show. Any other closing thoughts?
No, I think we covered a lot. Please hit us up with questions. Subscribe to our podcast, like us on YouTube, or on every place you are exposed to us.
Every place,
and let us know what topics interest you. As you can see, we're doing this episode because friend of ours who's very, very smart, just wanted to, there's so much noise out there too, right? So it's like hard to distill the signal from the noise. So I hope that in this episode, we really just spoke about the essence of each of these arguments.
Absolutely. Well, we'll talk later, I guess.
Yeah. Thank you, Alex. It was a pleasure as always.
Thank you, Shimon. It was our inaugural in studio pod.
Yep. Well, we'll see you guys next time.